Welcome to the Open Banking Salon at FinTech Talent's Virtual Nordics. Hope everybody's enjoying the event so far today. I'm your host, Paul Loberman, for this session, and I'm really excited to be moderating this next discussion. So the Open Banking Salon, it's an interesting word to describe this session. I thought it's not a debate, a fireside chat, a discussion. We're in the salon. But I looked up the word and found only 4 examples on Wikipedia, which I think fit perfectly with open banking and what I'm hoping to get out of the next 60 minutes. Let me quickly share those examples before we jump in and why I think they're relevant. The first example was a beauty salon. Open banking is one of the hottest topics across the world right now in financial services. But if this is the beauty salon, I'd love us to look beyond the pretty exterior of open banking as a buzzword and pull back the top layer, see what lies underneath. The second example is a drawing room in a house, an architectural space in your home. Open banking is being built with new architecture, infrastructure, and regulation plays a big part in this too. So I'm looking forward to seeing today if open banking is drawing the future, or do we need to go back to the drawing board? The third example is a champagne salon, and I wonder whether we're raising a glass yet to open banking success, or is the glass half full? And the last example, which in my opinion is absolutely perfect for today's session, because a salon is ultimately a gathering for learning and enjoyment. With that in mind, today I have 5 great guests in my open banking salon who are all working across the industry, and I'm sure are going to help us learn about open banking around the world, and I'm equally sure we're going to enjoy this discussion. So let's get straight into it by having each of you introduce yourselves and maybe briefly tell us a little bit about you and your companies and how you're involved in open banking today. Ruta, let's start with you.
Hello, Paul. After such a great introduction, I began thinking where I am, in which kind of salon. So I'm here to learn and share experience. So hello, everyone. I'm Ruta. I am from Central Bank of Lithuania, and I am responsible as the head of division for e-money and payment institution supervision. So one of our tasks is really to have this open banking working in Lithuania. And I'm also engaged in European level as a co-chair at Standing Committee and European Banking Authority that is responsible for payment services. And recently we have issued an opinion on obstacles for open banking. So this is our main areas we're I'm working in.
Okay, thanks. Rune.
Hi everyone, I'm the CEO and co-founder of Nordic API Gateway, and I'm happy to join your salon, Ruta. I think this is about learning and sharing experience also in our daily lives if we want open banking to work. And I think that's what I've been focusing on for the last 10 years or so with my companies, is actually to build open banking infrastructure that actually works. And it might sound a bit corny, but in reality, it's really, really hard to do so. I think I'll come back to that later. But for us, building something that really works means that we should provide any company with the capability of getting real-life access to personal and business accounts and provide payments capabilities directly from your accounts in a manner where you can address the full market. Not only like 40% of the market or 60% of the market. And that's what we do as a company. We provide a simple API and we do all the legwork to make sure that a market is actually working as it's supposed to do within PSD2. And then that requires a lot, like in terms of working with regulators, working with banks, working with fintechs, and have everyone kind of agree on what is a fair enough subset of data that you can retrieve and what kind of payments can you do and how is the user experience in the different solutions out there. We are currently live in the Nordics, in Baltics, in Poland, in Holland, and recently also UK and Ireland, and we're moving pretty quickly to the rest of Europe. And we serve up fintechs, accounting systems, and banks. We have like Danske Bank, OP Bank, DNB, Santander, Luna as some of our customers. And I think our goal is to provide everyone with the capability of building really stellar trains to provide really nice experiences for the ones riding those trains on top of the rails, which is open banking.
Okay, thank you, Rene. Bill. Welcome.
Hi, I'm Bill Roberts. I work at the Competition and Markets Authority in the UK. The CMA is the leading competition authority in Britain, and was the first to promote open banking. I think the UK was the first jurisdiction where open banking was introduced. I worked on the original market investigation, which threw up the issues that we were going to tackle with open banking. I worked on the design of the implementation process, which involves a trustee and an implementation entity. And I've been working on that for the last 3 years or so. So we're coming towards the end of the implementation process in the UK, but there's a lot of activity entailed in looking at the kind of read across, if you want, from open banking to other solutions. So I'm also a member of the Financial Conduct Authority's Advisory Committee on Open Finance. Open Finance potentially will take open banking technology and apply it to other financial products like savings products, investments products, pensions, and so forth. And wider still is an investigation by the government going on now into the application of data sharing and data portability in other regulated sectors. So we've had open finance, we've had open banking, we might get open finance. We're now looking at open communications, we're looking at open energy, we're looking at open whatever. Yeah, so that's my background. I'm a regulator.
Open everything. I think we're going to maybe talk about some of that, where we're going later on in this conversation, I'm sure. Ilko, welcome to the Salon.
Thank you, Paul, for having us. So just as an introduction, I'm from Mambu. So I work with Mambu as the MD for EMEA, fast-growing company, and we're in the business of actually providing core systems, so core banking systems to, I would say, new entrants, but also the legacy players in the banking industry. And what we do is more or less we provide a cloud-first, so also API-first system, which of course allows, or let's say if we look at the open banking side of the house, it allows easy connection to all open APIs that are out there. So it means actually we provide the technology to help facilitate new business models, help facilitate also let's call it the banks that are already out there, go into new business models quicker, with a quick time to market, but also to connect with parties out there for partnering. Basically just a, let's call it easier connect to the ecosystem.
Okay, thanks. And our fifth panelist has just joined us, having a few technical difficulties. Agneya, are you able to hear us? No? Okay,
Yes,
well, we'll come back to Agneya hopefully when she's solved her technical difficulties. But let's jump in now that we've got to know each other. Let's go back to the beginning of open banking. In Europe, it grew out of regulatory mandates. Obviously, the Payment Services Directive too was a big influence, leveling the playing field really for payment service providers and opening up the door to new entrants, but at the same time protecting consumers. The CMA were obviously very involved in that, and the CMA directive introduced a number of reforms aimed to, and I'll quote the UK government's own website here, is ensure banks work harder for customers and the benefits of new technology are fully exploited. So coming to you, Bill, given how close you've been to this for many years as part of the CMA, how have the regulations helped to achieve the objectives of open banking, and what more do you think needs to be done?
Well, the regulations were important in one very simple sense, in that the CMA has awesome legal powers. Had we not used them, although the banks, we think, had an incentive to adopt open and common standards for their APIs, they probably wouldn't have done so unless they'd been compelled to do so. And I think that's a lesson you can see right around the world now, that there are, I think, 20 or so jurisdictions adopting open banking. Those that have tried to do it on a voluntary basis have not done as well, I think, as we've done in the UK, because it's compulsion that has made things happen and made them work quickly. There may be other jurisdictions where it could work on a voluntary basis. Taiwan, for example, I've looked at where they're adopting it now. It might work there, but the big learning we've had is that regulations, compulsion, making it mandatory is the thing which really concentrates the minds and causes banks to invest in the technology and prioritize these sorts of developments. So that's the first point I make. What remains to be done? Well, it has to be said that the remit of the CMA and the scope of the regulations was actually quite narrow. It was limited to business current accounts and private current accounts. We extended it to deal with PSD2, but it was quite limited. So there are other financial products that ultimately should be included. But if you look at even just at the products that were included, the payment products, I think we've done very well. If you look at adoption of account information service providers, there are lots of apps out there doing some really smart things, including the banks themselves with their own mobile apps, making use of account information technology. Where we're lagging is on the payments side, although that's growing rapidly now, the number of developers who are coming in on the payment side has lagged account information, and the number of transactions or the number of API calls that are associated with payment products is actually quite low. Now, we think that's because of the functionality of the APIs that we've introduced so far, because we've introduced single immediate payment. We've made that mandatory. That's simple stuff for the payment, open banking payments. We're now moving towards improving the refund technology, the refund facilities and functionality, and making that mandatory. That's held things back quite a lot. We know from certainly from some fairly big players, they've held back from launching products in this area because the refund system wasn't adequate for what consumers want. And we think also there's certainly a strong case for adopting or mandating variable recurring payment functionality on the payment side. So yeah, we've come a long way, and the regulations have brought us to where we are. It's gone more slowly than we hoped it would, than we hoped it would initially. It's taken longer, and there's still work to do. And principally, it's on the payment side of things. But we have a good roadmap now for getting us to where we want to be at the end of the implementation period.
Great, excellent. That's obviously especially from the UK, but it's good advice for other parts of the world. Ruta, what have you seen anything different in your region? Is it also being fueled by regulation?
So if we look to the PSD2 is the one regulation that is a catalyst for open banking. And if we talk on implementation, it's only 1 year old. Implementation, the working basis. And I really like to compare with human beings because usually when we want some results of open banking, they said, oh, it started but nothing happened. But when we look to the child for 1 year old, what could you expect? It's just the first path taking for a child. It's the same for open banking in Europe and PSD2. And what I could say that there is regulation helped. If we looked at factual numbers, it's more than 400 or 500 third-party providers licensed across European Union. It's a big number, not taking in mind that some banks, some e-money institutions who had already had a license act as a TPP. So if we talk factual numbers, of course, it's already one of our objective competition of creating some kind of ecosystem of third-party providers is here. Maybe what is not here is the level playing field or level infrastructure, the same infrastructure within Europe. If we talk about only Nordic, Baltic countries, we could say open banking works very well. And I will maybe elaborate more later, but it's our daily life for a customer space. But if we look to the Western Europe, I guess it's a big different situations. Therefore, I think it's very important to create this level playing field across the Euro. I mean, in tech-wise sphere, and it's something that we should work on a future 5 years. And to say that 5 years old man is growing, PSD2 is growing, and it's something that we should have as a goal as regulators.
Okay. And Rune, I remember hearing that your open banking journey started long before the regulations even came into force. So how have the regulations supported you, or have they, at the Nordic API Gateway?
I think in the beginning, that was back in 2012 when we rolled out automatic connections to all Danish banks. We didn't actually speak to the regulators because we were in a completely unregulated field, so there was no need for that. But of course, we had chats with a lot of different governmental authorities, the Forbrugerombudsman in Denmark, for instance, about like sharing data and all these things. And we took a lot of we made a lot of legwork back there in terms of processing legal stuff for doing what we're doing. It was way before GDPR. It was way before PSD2. And I think some of the learnings is quite interesting. You could say at that time everything was much clearer in Europe because we could fetch the APIs and we could decide how to build stuff upon them, right? But on the other hand, if APIs they changed, there was no procedure for like letting us know because we were fetching them off the mobile banking APIs that banks use themselves, and they had no obligation to tell us. So you could say with regulation also came some kind of communication protocol between third parties and the banks, which I think is very healthy. I think it's very interesting what Bill mentioned in terms of how they approach regulation from UK, because I think there's a huge difference between that and then PSD2 in Europe. One of the main issues with PSD2 is that it's a centralized but still open-ended regulatory scheme that is being imposed upon countries, right? Where Bill and his team, they are actually willing to do all these things as a country. So they move forward. They presented the opportunities back to the country of doing this in an open-ended manner. Where if you go to the FSA of Denmark, for instance, they just have to adhere to what's coming from EU. So that means it's not necessarily the same kind of proactive FSA sense we see there, but and it's a natural thing, I think, but it just makes it really hard to navigate these days. So to me, the biggest issues with like regulated and unregulated is probably how you approach the regulated space, because I think this should be regulated. It makes a lot of sense to make sure that this is within some kind of confined scheme and that everyone is being pushed to deliver on this agenda and to do it securely and all these things. But if you look, the difference between UK and Europe is probably, if you know the movie Jumanji, where people are being dropped in the jungle and they have to learn to survive or it's game over. I think it's very much the same with PSD2, that it's this big interpretation jungle with a relative framework called PSD2 that everyone has to interpret either as a regulator or as a TPP or as a bank, you know, and in the end, it's really hard to just do a single, very coherent API if everyone is interpreting things differently. And I think that's the major issue of like accelerating PSD2. And if you look to the States, it has been unregulated there for many, many years, right? We had Yodlee back in 2000 starting to do what everyone has been doing here since the 10s in Europe. And they took all the turns and all the fights, and Plaid did so too. But the one thing that they had from very early on is like a simple way of doing payments account to account, which led to Plaid being very big in the US, right? They got customers like Venmo because they had this single clearinghouse where you could do account-to-account payments across all the states. And I think that's where we should be moving with PSD2. The work of all the aggregators is to do a single API, but it should have been some kind of a single API from the beginning. So I totally agree that from a tech point of view, as you said, Ruta, we need to create a more level playing field also from that direction to make sure that the APIs are approachable and easy to use and easy to aggregate. Because there's no real need to just fetch data from one bank, right? you're providing solutions where your customers would be fetching data from any bank.
Interesting, because it's clear that the UK and Europe have been very regulatory driven, but whereas in the US we're seeing that they're not driven by the regulation, they're being driven by kind of the market rather than being mandated. And I'd be interested in your view, Ilko, in terms of the Jumanji animals of open banking, where we're roaming around. Are there any interesting comparisons or differences that you're seeing in how countries, banks, fintechs are approaching open banking across the globe?
Yeah, I tend to agree on, let's say, the head start that the US took created, let's say, a level playing field in one side, so it was easier to navigate. On the other side, the creativity, or let's say the fact that in Europe we more or less mandated, as Bill correctly said, the fact that you need to comply, brought a lot of, let's say, innovation quicker to the market. So what I see here on our side is more differentiation on, let's call it, new ways of, let's say, interacting / using the data that's available. And it also drives the banks or the existing parties to think about their strategy moving forward. So beyond, let's call it just the current let's say the two main topics that are being shared today with open data. So I think from a creativity point of view, we see more happening here. There's more interaction with new business models. From a, let's call it, valuation of companies in that new space, of course, what we see now is that in the US, you have a couple of monoliths that are valuated at a very high, let's call it, monetary sum, which is completely different to what we see here. Here we see a lot more smaller parties that still have to fight for valuation, but also will need to become more creative to start to, let's say, start on that journey towards existence for a longer period. So I believe that the competition on our side is more healthy. However, I think the single standards that they've brought in there, we could copy a little bit of that and start introducing, let's say, more clear standards on futures across countries, so it's easier to navigate business model across countries and cross borders. Because if I'm a let's call it a revenue model driven company that operates well in, for instance, the Nordics, I'd like to expand that for the other regions as well, or the jurisdictions. If I cannot, I limit myself, and there will be international giants coming to in that sense, overtake me. So it would be nice if we can learn from that aspect. On the other side, I really believe in this regulatory-led model, because it drives creativity, it drives innovation at a really fast pace.
Yeah, it's interesting. There's certainly kind of a lot going on, and things are moving very quickly. Let's leave the regulations to kind of one side now and put our attention back to really open banking solutions and the customer value that they create. There's definitely something around overall simplicity, quality, and accessibility of a bank or fintech's API documentation. But with its high number of banks and fintech companies in the UK, Bill, what have been some of the key lessons learned that you've seen that other banks can learn from too?
Well, I was thinking the other day that I used to work in the newspaper industry, and around the time that the internet started getting popular, the newspapers differed in their view. Some saw the internet as a huge threat. Some saw it as an opportunity. And I think we've seen that in banking, in open banking in the UK. So people often say, what do the banks think about this? And I said, well, different banks think different things. So I would say one lesson is the banks that have seen it as an opportunity are going to be the ones who do best, because whether they think it's a threat or an opportunity, I think in their heart of hearts, they know it's inevitable. It's coming. It's not it's not a splash, it's not a wave, it's a tide that's running. You look around the world and it's being adopted globally. So a big lesson for the banks is just go with the flow, see it as an opportunity, partner with fintechs, which is what some of the most successful banks here have been doing. And don't be afraid, because if you'll get left behind if you try and slow things down, and everyone else will overtake you. I think it's one of the biggest lessons for the banks here. The second thing I'd notice that one of the most surprising things for me has been the uptake, the very, very rapid uptake amongst SMEs. So initially, all the focus was on consumers, what the consumer's going to get out of open banking, and yes, there's some smart little apps. No real killer applications were emerging on the consumer side. And then you look at the path of adoption. So what are people actually doing in the marketplace? And the SME adoption has been far faster than I thought it would be in the UK. So we've got maybe 2 million individual unique users, active users a month now. And it's doubling about every 6 months. So we've got 2 million in the UK using open banking. Can't quite break it down into consumer versus SME, but there are only 4 million active SMEs in the UK. So however many are actually using it, it's a large portion of the SME population. So we're seeing, if we thought about it, we would have realized who were the first people to buy mobile phones? It was SMEs. Who were the first people to buy fax machines? It was SMEs. And it's SMEs who are rushing into open banking because it enables them. Well, one of the major benefits for SMEs is that it enables them to integrate their bank account information with the cloud-based accounting systems they're using. So like Xero or Sage or Intuit, QuickBooks. That integrates perfectly. So you can reconcile your accounts payable ledger with the cash you've got in the bank, for example. And that saves you time and stops you chasing people who already paid you. Really simple, huge benefit. So I'd say to the banks, see it as an opportunity, not as a threat, and you'll do better. Partner with fintechs, that'll get you there quicker. And nobody should underestimate the appetite for open banking products amongst SMEs. They will be the early adopters, without a doubt.
Yeah, I don't think banks have really tapped into that SME side yet. There's been a lot of focus, obviously, on the consumer side. So I think that's really an interesting point, and something that could be a differentiator for people. And I think what you said there and earlier around payments, there's a lot on the aggregation side, but limited kind of on the payment side. And I think that's going to be a turning point. I read some research recently that expects the open banking opportunity to be $43 billion by 2026. Right? So there's a huge kind of appetite there. And also, it's fueled by a rapid increase in online platforms enabling payments, embedding finance and embedding payments, and also a surge in those partnerships that you mentioned as a key distribution channel. And Rune, I wonder if you've seen any, on your travels, where any new propositions and those partnerships between banks and fintechs taking advantage of APIs across Europe. Any great examples there?
I think there is actually tons of examples. You could look at guys like Mina Technologies or Subio that does subscription management, and that are really, really rolling out fast with banks these days because they provide a service that is actually integratable with open banking for banks to get even a better chance of being the primary interface in terms of relationship with their customers. But I also think, as Bill said, that we focused very much in our end of the business at accounting and SMEs as well, and realized very early on that everyone was talking about consumers, and we focused way more on business account access on our platform. And today we have all the SME serving accounting system providers in Denmark. They are using our platform to actually automate the whole accounting process. And we have like 15 accounting system providers in the Nordics as customers already. So they're moving really fast. And what we see there is if a bank launches account aggregation for consumers versus an accounting system provider that launches aggregation for their SMEs, the usage is much higher in the accounting system, and because there's a clear-cut use case for that, right? Where if you go to a bank and you aggregate data, is it something you get something out of, like being able to see your balances in one app, or is the bank actually getting the most out of that relation, right? Because you're serving up data for the bank. Whereas if you add payments to that equation, making sure that you can aggregate your accounts and then pay from any account, all of a sudden the benefits are much more mutual, because all of a sudden you can use just one app to do all your banking business. And we've seen that a lot in the Nordics, like guys like DNB and Danske. They just recently launched account aggregation and payment initiation, and the usage kind of 10 doubled in the aggregation part also, because all of a sudden people, they got a real benefit from doing so. So I think that's one end of it, right? And you asked me about like great fintech partnerships. I think what we see right now is everyone is talking about bank versus fintech partnership. And I agree that it's a good idea for banks to use fintechs to kind of like accelerate innovation even further. But I also think that banks have been kind of woken up to be able to do some of the work themselves. Where what we see is actually that banks are the biggest TPPs that we have. And the ones moving first on any market that we enter, it's always a big bank. So we actually use that relationship with banks to provide them with innovation capabilities that allow them to act more and more like a fintech. We have, like, again, DNB, they launched an app for SMEs that allows you to track your finances. So instead of like focusing on the bookkeeping part, they focus on cash flow prediction and whether you can pay the next round of VAT to the government and stuff like that. And they aggregate accounts and present that in a simple interface for small-time business owners, right? So I think banks are moving in this direction, and sometimes they're getting help from fintechs, sometimes they're doing it by themselves. Right now, I think that fintechs have probably a big redefinition phase to go through, where originally launched, it was kind of like a challenger or a disruptor to banking, where I think today it's very clear that it's not probably going to happen that easily to disrupt the whole banking industry. So I think many fintechs, they're either changing to become banks or to actually figure out what is their niche products, right? So if you provide personal finance overview, what would be your niche product in order for you to survive? Would it be selling it as a white label to a bank, or would it be adding some kind of personalized offer model inside the app? I think that's what we see right now, a lot of innovation on the business models in order to stay in the market.
Yeah. I think that's a great point in terms of a lot of fintechs becoming banks or bank-like. I think that there's a huge trend. Every week there seems to be somebody new, whether that's kind of Square, Shopify, or recently Credit Karma. Last week, it's certainly a growing trend. But what are we, from a bank's perspective, what are the things that we need to look at in terms of what are the important considerations that banks should focus on here? Ilko, you work a lot with the banks as well. What do they need to be thinking about here in terms of not only just partnerships, but the solutions that are coming?
Well, I think it's beyond, let's call it the open banking side. I think it is, if I look at, correctly as Rune said, the revolution in banking, led by some of the new entrants, led by some of the initiatives, actually what happens is it's only about, 3 to 4% of banking, right? So it's not that big yet, but it has set in motion a different way of thinking about, first of all, how to set up your customer journey and act on customer, let's call it, customer delight in that sense. So you need to satisfy the needs, and the needs are beyond banking. So that comes to different use cases like e-commerce that will pop in. Let's say the liquid gold is not going to be the bank account and the interest you get off of it. It's going to be the data of those on the platform, whether that be SMEs, whether that be the let's say consumers, and what you do with the data and how you share it and how you get permissions and how you secure that data. And I think the main lesson learned already today for a lot of the banks is how do we migrate, let's say, not just the technology, but also of the bank to a culture to quickly act on those upcoming new initiatives, because it's not the new entrants they should be worried about. It's all the side, let's call it business initiatives that are still small today, but which will be led by the SMEs, the customers, simply by demand, because even COVID today is creating such demands. Very simple things like on product side, I mean, stop a loan because of COVID. How do you do that? Well, the new entrants can do that in about 2 weeks because it's just done in the cloud. They click, and it's done. If you do that with the old products, it's pretty difficult because you have a whole stack to go through. So I think the whole item here is not about just really looking at, okay, what is changing, but how can the banks really create a, let's call it, shape and form in their culture and also their organization to act quickly and move with the market, and maybe not just follow the wave, but create the wave. So be some of the first to start acting with, let's say, the new business models that are out there, and some of their, let's say, most feared ones in the e-commerce side that already are having bank licenses today. Not just see them as competition, but see them as, let's say, enriching of their data and being able to offer more services to their end customers. I think is the real, let's call it, road we should be looking at, because that's way bigger than the 3 to 5%, maybe 4% of new entrants. That covers all of their customer base.
Yeah, I love that culture to quickly act to meet the consumer demand. Yeah. And let's talk about the consumers, because we've talked a lot about the regulations and the banks, but let's kind of think about the consumers a little bit. Obviously, we're going in the right direction. Bill said over in the UK, we've got 2 million consumers in the last 6 months. It's doubled, basically. There's 500 million API calls a month now happening. Are we seeing that trend grow elsewhere? Ruta, are we seeing customers around Europe being more open to open banking? What's been the reaction from the consumers in your region?
Okay, so open banking really was the biggest disruptor in Lithuania, in our countries, in e-commerce payments. Truly, like 90% of our e-commerce payments are done via using TPP solution. What I am talking is about initiation services. It's something that is a new normal for customers, so it's nothing new. If we compare to some statistical evidence, it says that almost all our Lithuanian customers has used TPP solution in order to pay via e-commerce. From a consumer part, it's a thing of really a matter of convenience. So it is a good way to have some convenience for them. And I could agree with all who already talked that maybe from consumer part, it's not so evident what's so good for that. And only now what we see the new models are coming in, it's because, the consumers needs to feel why they need to share the data of their bank accounts. And it's something the new models are integrating with another services. For example, if you want to get some kind of insurance policy, instead of providing information yourself, there is a TPP integrator in your app that could use your information on accounts, and then the insurance company could provide you with some kind of proposal. So for a consumer side, you really need to see the value of sharing this data, because you are very cautious. And the first companies that consumers will share with, I guess it will be the financial institution, maybe not banks like for a payment side, but the other ones, investment companies. Another example I could see that as credit scoring. If you want to get a credit in the Baltics, in this region, you need to do a lot of stuff in order to provide information that you are trustworthy. So really the integration with your bank account could help you to get this finance easier, both from a consumer part, from SMEs. So I could say the second phase of open banking is just going on to create this added value for customer and consumers.
Okay. Yes. And on the consumer side, clearly there's value to be created and certainly increase. But do you see that, Ilko, on the bank side and with the new entrants? Do you think that increasing customer usage translates into consumer usage for banks as well?
Yeah, I do, but I think it's beyond. It's again a topic of education, in the sense that when this was put into the market, let's say a lot of whether it's consumers or even SME, it doesn't really matter. Everybody was a bit scared in the sense of, hey, sharing data. That's been the main, let's call it topic that we still see even today in a lot of the discussions that we have, whether it's be a regulator, whether it's with the bank, whether it's with even end users in that sense. However, if the use cases become more apparent, as Ruta also just mentioned, people start to mix and match, thinking, hey, okay, I can offset the risk against a use case. And secondly, we've come a long way with, let's call it, covering the risks. So then it becomes more a business case for them and ease of use. And I think if you look at the consumers, as you mentioned, people are a bit more lazy, especially now also with COVID and all these times. They are more at ease with taking a risk in the sense of getting to services, whether it be from banks or any other player. So technology is more trusted. It doesn't mean that automatically we get more business from that, but it does mean that models, once explained well, are accepted and adopted faster because it's being pushed due to COVID. It does also mean that we need to very much, and I think Bill will agree to that, be very straightforward in what is regulated, what not, and how we also interpreted, let's say, security measures, how it's being acted on, how data is being kept or encrypted and all of that, so that people have, when they go into, let's call it, clicking yes, 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 just like with the cookies one day back ago, that they know what's going on. I think transparency is the biggest item here, and then yes, it will go up quickly, and adoption will be there quickly.
Yeah, I think the consumer confidence in these applications is really important. I'm a big advocate and user of all the apps that take advantage of open banking. I think I've got all of them on my phone. But when I speak to my friends outside of the financial services or the fintech bubble, they really don't know much, if anything, about open banking and what it means for them. And I find sometimes the best way to tell them about it is usually just to show them the app, because describing it as sharing your bank data with third-party providers and applications sounds a little bit scary, to a lot of people, right? But it shouldn't be, because if you can build that trust, and given that we're seeing an increase in the users of open banking, are we seeing an increase? Does that mean in consumer confidence in sharing their data, or do you think people are still a bit more wary about that? Bill, from the CMA perspective, are people confident now? Do you think we're there, or what more can we do?
I think it's not a matter of yes or no, whether they're confident or not. I think what we're seeing is that, certainly our research said, that there has to be a value exchange, that people recognize there might be a risk. There's a risk in doing most things, but there's certainly an obvious risk in sharing your data. It's a bit like the kind of decision people are going to have to make about driverless cars. You can see the risks of driverless cars immediately. You can see the risks of open banking and data sharing immediately. So there has to be a value exchange. They have to say to themselves, well, yeah, okay, there is a bit of a risk here, but what's the benefit? What am I going to get back in exchange? So there has to be a value exchange. There has to be a benefit. So we've said there are 3 S's for consumer adoption. The first is salience. There has to be a benefit to someone in using it. Secondly, it has to be secure, and they have to be sure it's secure, that the actors in the ecosystem are regulated. There is a system of redress. There's a trust framework around the whole thing. And the third thing is it has to be simple. It's the third S. that we found, for example, the early authentication, the redirection authentication journeys that the banks put in originally back in 2018, they were very, very complicated. There was an awful lot of friction. So maybe you had 15 click-throughs to get where to authenticate yourself, or you had to wait for a one-time password to be texted to your phone, or you had to talk to somebody in a call center who wanted to know what the name of your first dog was. I mean, it's endless, endless complications and obstacles. Or maybe you get to the end of it and you say, yeah, I finally got there. I can use this product now. And the question would pop up, I see this as a joint account. Two people have access to this account. Has the other account holder, your partner, given you permission to share this data? Oh, they haven't? Oh, I'm sorry, you have to go back to the start again. So what we have said is that it needs to be really simple, as well as being secure and salient. And I think the best example we had of that was when we switched from this very clunky browser-based authentication journey for customers to the app-to-app authentication. So you want authentication which is secure as well as simple, those two S's. Well, a thumbprint or facial recognition is that. And when we required the banks to make available biometric authentication via mobile phones, consumer usage went up very, very rapidly. In the case of one provider, the usage doubled, basically. So simple, secure, and salient to the customer.
So it's So I think it's there's definitely some increase, but we need to kind of really focus on telling the customer exactly where that value exchange actually is. Rune, any further thoughts on that too? Whether in terms of your journey, you've dealt with customers for a long time. Has there been a marked change in their confidence? Whether are you seeing a step change yet?
Actually, yes, and no at the same time. So on one hand, you see all the big American tech corps that kind of absorbs your data and does whatever they want with it, right? That's the sense that we get, and also all the press stories about like Facebook, Google, and so forth, and lately also the Social Dilemma movie made by Netflix. So on that end, it's probably hurting the whole data sharing part. But as Bill said, it's all about value exchange, right? So if you have benefits out of sharing your data and you have, to some extent, trust, and trust can be gained by enforcement, like a regulated trust like GDPR, which I think is a very good idea, but also by being transparent as a company. So if people, they look you up on the internet, if they look your Facebook group up or your Facebook page or whatever, and they can see that you communicate with your users or customers or whatever in a very open and transparent way, it probably leads to more trust than if they just see some kind of closed wall and a company that doesn't really communicate with its outside world. As an example, we have like a bit more than 400,000 users on a personal finance app that we created here in Denmark. And we experimented a lot with like putting trust icons onto the bank pages, like putting a padlock saying that it's secure and stuff like that. This is bank grade security, blah, blah, blah. All our tests showed that the less we communicated about security, the more adoption we got.
Interesting.
So like if you have to talk about that this is secure, if you have to mention that we don't do anything bad with your data, it actually makes people think about, okay, what are you actually doing, right? So, and I think that's where GDPR is so great. If you really use the consent part of GDPR to your own advantage as a company, being very transparent about what you allow yourself to do with my data, that generates trust. And I think that's a very important lesson in the market. And we see more and more share that data naturally through the services. Also, the more companies are willing to advocate that you should share your data, the more it becomes a normal as well. I think the horror example is probably Mint from the United States, that back in 2009, they had a call center in India. And there was no GDPR in the States, there was no regulation, right? So for the guys in India to actually kind of error debug on people's accounts, they send all the PIN codes and the login details for the banks of more than 1 million users, right? This is not something anyone should allow if they want to be able to keep receiving data from us.
It's interesting, Robert. I remember building online banking solutions years ago and putting the padlock image in there to give the sense of security to customers. And you mentioned kind of social media, and I think one of the things about social medias and feeds is they have a personalized kind of feed for you. And I think that's somewhere where we're probably going. And thinking about the customer value here for open banking, Ruta, I read a quote from you recently that I absolutely loved. It said, if open banking in Europe is used effectively in 10 years' time, we'll be able to indicate that the acronym PSD2 is a catalyst for personalized service delivery to a customer. I love that. Do you want to tell us a little bit more about quickly the open banking enabling more data insights and future personalization of services?
Mm-hmm. Okay, so the thing is, what I was talking about, really PSD2, the biggest victory of PSD2 is already now is interchange of data, is a common standard. What we have, the open API, how you just name it, it's a secure way to communicate and to interchange the data. The scope of PSD2 is not so important because the importance is really that the interchange of data, it works. And if we look at the consumer, we have a lot of data among us. It's our data bubble, I could say, and a banking payment account is one of them. Another one is, like you mentioned, social media, telecommunication, then loyalty schemes that we are in and using our loyalty card all the day. It's all the data. And API standards really says that this kind of data could be interchanged. The big tech companies' data could be changed, and the banks could use advantage of it. And the question is about, what's the value for a customer? And then we talk about this personalization. During the centuries, it was different economic value for a customer. In once, it was just a good value for you to have, for example, a coffee. Then the value was experience. You have a coffee, but you want to drink it at a restaurant, not at home, because experience, it's what matters for you. And now it's what we see, it's personalization. We want to have a personalized experience, and it might be done when some kind of patterns of you, then the service provider knows you. And how can he know you? Only by examining, analyzing your data, your behavioral patterns, and really suggesting the services that is really you. And I guess that I really mentioned that for financial point of view, for customers, it's very hard to decide what kind of services to choose, especially if we talk investments, if we talk insurance. So imagine every time you come to insurance brokerage firm, they say, what do you want to choose? For a customer base, I don't know. I need to learn a lot, even if I am. So imagine if by analyzing the data, by having the patterns, you come to insurance brokerage firm, to investment, they say, I don't need to know what you want. I know what you want already based on your behavioral patterns. So this is the value, personalization value that could be created by open banking as a catalyst.
Yeah, I think that personalization will really show the value to those consumers, and that's where we might get an inflection point. So we've heard a lot about how everybody's embracing open banking. I really think that we are at the start of the capabilities, the propositions, the new way of providing that value from open banking. But let's start to wrap up the session by thinking about the future and what's next. Where do we go from open banking? We know the next natural step, as Bill mentioned, is open finance, but then it's open data, maybe it's even open everything. Is it going to take a broad approach? Let me go around the panel and just give me 2 or 3 things that are exciting you about where you think open banking is heading. Let's start with Bill.
I don't think you're going to see an Uber moment for banking. That's one thing I don't think you're going to see. So exciting in the sense that financial disruption on a scale we saw in the video industry or some other sectors, I don't think that's going to happen. But I think one of the biggest changes could happen when the big platforms get into this. So we've already seen that Google has a payment initiation license in Europe now. So where's that going to lead? So if you imagine Amazon or Google entering the payment space, Facebook, Google, Apple, I think they're all testing payment products in India at the moment.
Yeah.
So
big tech companies. Definitely.
It's very unlikely that they will want to become deposit takers. They won't become banks, but they might well want to participate in banking services.
I'm going to jump onto Ilko now as well, because we're going to wrap up shortly. Ilko, what are the 2 or 3 things that are exciting you?
Well, I think it is, let's say, I won't say open everything, but from a business aspect, yes. So multiple business cases coming in, as mentioned already before. So whether that is via e-commerce or anything else, that is where data sharing becomes, let's say, inevitable, but also will open up a huge potential for the consumer market, but also even the SME market, any market in that, for that matter. However, again, I agree, it goes accompanied with security, transparency, and again, transparency for the people that are entering it from the consumer side.
Excellent. Rune?
Yeah, I actually think that the space of opportunity is probably what excites me the most. What we've seen so far is like a regulated API economy being built up by PSD2 and open banking. And I think the next phase will probably be, whether you call it open finance or whatever you call it, about a space of opportunity for anyone to participate in the value creation and also the monetization streams of APIs. So banks, they can provide new APIs, they can provide identification mechanisms that is outside the scope of regulation and do it and monetize them together with the industry.
Thanks. And Ruta, finally from you.
So I want to just bring the consumer in the center, and what really fascinates me is really that data follows the consumer. And I feel that everything will be surrounded by consumer and the data. And this is the paradigm that has to be shifted. It's not the companies that own the data, but the consumer. And it will be the shift really interesting in this field.
Excellent. Thank you. So I think we've heard a lot in the short space of time today. It's certainly far from finished in terms of this conversation. We'll keep it going. We've heard a few key themes: regulation, standards being important, a culture that enables banks to act quickly, effective partnerships, ensuring value exchange, and of course, customer and consumer focus. They're great foundations to take us into what's next for open banking. I want to thank everybody in the Open Banking Salon for being so open today and sharing their views, and everybody that's watching on the live stream. I hope you're all still enjoying the event. Stick around for the next session. Another topic that's front of mind, financial health. Lots of broad conversation to cover on that one, I'm sure. Thanks again to today's panel and everyone out there in the FinTech Talents community and beyond. Stay safe, stay healthy.